So Brian, you can unmute. Brian, unmute, then you read for us. You take us through the question, just to reading. So Brian, there we go. You can just unmute, then you read for us.
Moment I'm looking for the question.
Brian, sauti iko chini. Brian, we can't hear you.
That is
Brian, sauti iko chini sana. Maybe who can help Brian, sauti yake?
P-limited.
Yes. Proceed.
P-limited. P-limited is a public listed in the Security Exchange. It has diversified its activities by acquiring. Yes. Maybe the laptop yangu of shouting. P is a publicly. P Limited is a public limited company listed in the Security Exchange. It has diversified activities by acquiring X Limited, a company domiciled in a foreign country. Both companies prepare financial statements in accordance with international financial reporting standards. The presentation currency of the is franc. The draft financial statements for the year ended December 2022 are set as below. Revenue, cost of sales, gross profit, as you can see from the 31st December, assets and current assets, equities, non-current liabilities and current liabilities. Additional information. 1st January, 1,000 million franc ordinary shares for a cash consideration of 3,550 million francs. As at the acquisition date, the carrying value of S Limited net asset was 2,600 million franc, but the fair value was 3,200 million francs. The excess in fair value over the carrying value was due to an unrecognized brand with a remaining useful economic life of 5 years as at the acquisition date. 3. The non-controlling interest in S Limited as at the acquisition date was valued at 1,450 million francs using the fair value method. As at 31st December 2021, it was determined that goodwill arising from acquisition of S Limited was impaired by 10%. The following foreign exchange rates are relevant. 1st January 2012, 31st December 2021, average for the year ended 31st December. Required. Determine the exchange difference, gain or loss, arising from the retranslation of net asset goodwill on acquisition of foreign subsidiary, consolidated statement of profit and loss, and other comprehensive incomes for the year ended 31st December 2021, consolidated statement of financial positions as at 31st December 2021.
Thank you, Brian. Thank you, Brian. That was well. So, can everyone check required Roman 1? Everyone to check required Roman 1. I told you in the last class that it can be required. You know, last time we were just doing it as a working so that we can get the exchange gain or exchange loss. So, I'm giving you 30 seconds is enough. Just go back slowly. You check how we did the exchange gain or loss on translation of net assets. In the previous question, just peruse back. Check how we did the foreign exchange gain loss on net assets. Mmeshaona. So what you do, you take the opening, you add profit, you get closing, then you translate closing, then you compare. So there we go. You say there, today is required A. So A, exchange difference. Exchange difference. Exchange difference on translation of net assets. Translation of net assets. So we are translating from in France, so we are translating from let me call it France to Kenya shillings. So shillings are in million. You put here rates, you bring them to Kenya shillings. You bring them to Kenya shillings. You bring them to Kenya shillings. So you start with opening. So opening net assets. So opening net assets is at the beginning of the year. Remember, we are closing on 31st December 2021. So you check them on 1st January 2021. So I want you to check additional information number 2, please. Check additional information number 2. As at the acquisition date, the carrying value of S Limited's net assets was 2,600 million. You know, it was acquired on 1st January, exactly at the beginning of the year. But the fair value was 3,200. So before I proceed, whenever in your accounting career, and even in financial career, whenever you have fair value and you have book value, the fair value will always supersede the book value. So anybody in accounting or finance giving you fair value and also carrying amount, no carrying amount is the book value, giving you the carrying value and the fair value at the same time, then you always, for accounting, you always consider the fair value. Fair value is the true value of an asset or liability. So we go for the fair value before even I go for the many stories. So this was 32. Sorry, this was 32. So I can, however, I can listen to those other stories. The excess in fair value or the carrying amount was due to unrecognized brand with the remaining useful life. Hiyo itakuja baadaye. So brand is the difference between 32 and 26. So brand is 600. The revaluation element, that is the brand. So that is not a concern right now. So I want to translate this one to Kenya shillings. You use the rate which was there when that's at, okay, it's the opening, beginning of the year. But unfortunately, our beginning is also the date of acquisition. So you check 1st January, the rate was 5. So translate that one at 5. And if you check, it is francs to 1 Kenya shilling. So you divide. Actually, most of them you just divide. So thank you, 640. Then you add, to get the closing, I told you, what will bring difference between opening and closing is profit. Because net assets is ordinary share premium, retained earnings. So unapata ordinary share premium, they don't change. What keeps on changing is profit. So when you top up profit here, you will get the closing. So you add post acquisition, but now you see just for the year. Post acquisition is just for the year. Kwani kuna mtu ameshindwa kuingia class. So say there, add profit for the year. Let me listen to him. Add profit for the year. Yes, Paul. Yes. Niko salama. Sawa. Small interruption there. So you add net profit. So net profit for the year here is the post acquisition because it was just acquired at the beginning. So profit angalia for P&L. Check your P&L for S. Just check S keenly, but it will make some small adjustments because it should be the accurate. It should be the accurate. It should be the accurate profit. So hapo naona kuna small adjustments which we are going to do, but that's not a big issue. So when you check P&L, profit for the year is 1,500. But 1,500, if you check note 2, they were saying the excess in fair value or the carrying value was due to an unrecognized brand with a remaining useful life of 5 years. So it means there was amortization of that brand. So somewhere outside, just do it casually outside there. You say brand, I'm going to grab this. Brand is 32 minus 26, which is 600. So amortization is 600 divided by 5 years. Divide by 5. 600 divided by 5 is 120, if I'm not wrong. So that one should be subtracted. The correct net profit should be that 15. Did I say 15? Yes. So it's 1,500 minus 120. That should be 1,380. That is the correct net profit after subtracting that amortization. So adjust that. Thank you. So 1380 is now what you translate to Kenya shillings. Using which rates? I want to check whether we are good. Thank you. We use average. Profit always use average, which some people are saying 6. So 1380 divided by 6. What do you get? To 30. So what happens? What happens when you add this plus this? Unapata closing. So this closing, which you get, attention, when you take this plus this, you get closing. This plus this, closing. So to get exchange gain or loss, when you add this one and this one, then you translate at closing. Closing here is 4. So this plus this divided by 4. If there is no loss, there is no gain, immediately you divide, the answer you get should tally, should be the same as this plus this. That one means no gain, no loss. So if you have this plus this, then you translate at closing, you should get the sum of this. But you will find when you divide this and this, you add this and this, then you divide by the closing rate, it will differ. That difference is the foreign exchange gain or loss. So bring it here. Exchange, we don't know it will be exchange what? It will be our balancing figure. So it is not there, but it will be here. So can you add? Can you add this plus this? What do you get? Thank you, 4580. So this 4580 is the closing. So this is closing. Net assets. So this closing, you divide it by the closing rate. Closing rate is 4. So what is 4580 divided by 4? Thank you, 1145. 640 plus 230, that is 870. So it is not in agreement. When you add this and this is 870, but this is 1145. So the increase is again, so come and say here, foreign exchange gain. This is the balancing figure. How much is the gain? Thank you, 275. So the gain is 275. How many marks? 6, 6 marks. So 6 will be marked this way. 1, 2, 3. Hizo tu wanamaka, kunanga kitu ingine, kuna haja ni wanangane. So it is 3. 3 at 2. What other question? Thank you. Abdullah, the rule on accounting for fair value is not applicable to inventory. Correct? Hata kuna haja uendelee mbele. Inventory, no, it is applicable. It is applicable because inventory, when you check IAS number 2, when you check International Accounting Standards number 2, if you have time, you can read. But if I may summarize, it says that when you have the net realizable value, you know, net realizable value is the fair value here in this case, the net realizable value, but after subtracting the cost to sell, or net realizable value or the cost, you go for whichever is lower. So it is applicable in the sense, unaweza pata wewe ulinunua stock, the cost of your stock was 80. So a business person will not want to sell at a loss. They will sell at a profit. That is called, let me not go to economics of consumer and producer surplus. So this person will want to sell at a profit. But inafika mahali, kama sahi, 2022, KRA had compelled all business people to purchase Teams devices, ile ka gadget ya Teams in 2022. Right now, wanatuambia now, in fact, those people, unajua naona watu wengine bado wanasema ati it is Teams or e-Teams. Hakuna. In fact, check when the people who used Teams gadget, their output were not properly transmitted to KRA, and it brought a lot of VAT issues. Wanajaribu kuhepa hiyo story. So KRA is no longer, even businesses, nobody is buying those gadgets. Nobody's buying those gadgets because they'll become useless. So if you find someone who can buy those gadgets, unauza kwa ile mnaitanga throwaway price. So you can sell, sasa ukipata mtu aende kwa shop, mtu alikuwa na Teams, atakuzia at throwaway price. So you find sometimes that the cost is more than the fair value. So wewe utaenda uuze hii hata utaenda uuzie mtu 20, wewe chukua hiyo kitu. Juu hata unajua hakuna kitu atafanyia. Labda watoto watatumia kama toy. So in this case, you will consider the fair value. So when you are accounting for the closing stock, the way you're saying an IS2, you have to compare. You see at the automatic, you disregard this. Sometimes the fair value is below the cost. So you go for whichever is lower between the two. But ideally, for those other assets, in stock is where unawekanga pause. You go for whichever is lower to avoid. But the other assets, you go for the fair value, provided the fair value has been given. Hata kama ni low or high, you go for fair value. But for stock, you have to check cost first. But in most cases, tunapatanga cost ndio iko chini. But in a normal scenario, you will find the fair value is higher. So you pick whichever is lower. Audi, I hope I've tried to answer you. Yes, thank you. So allow me to Roman 2, check Roman 2. Roman 2, they want us to prepare consolidated statement of profit or loss. But now, before I go to that, I saw something in note 4. Please check note 4. Check with me note 4. Note 4, they said goodwill was impaired. Impairment, it affects P&L pale kwa administrative. So you will allow me to calculate goodwill, we impair goodwill. Then from there, I will not have any reservation not to prepare P&L. So and also, sisi hata kama time ni kidogo, that we have to go for quality. go back and check goodwill computation in the next few seconds. The way we did that other one, just check back how we did it, then we connect. That was enough. So working one, goodwill. I want us to calculate goodwill on acquisition. On acquisition of S Limited. Acquisition of S. So what you do, goodwill, calculate it first in foreign. Then you translate with the main objective of checking gain or loss. So you will have here France, rate, Kenya shillings. Thank you. So we start with purchase consideration. So for this question, I really want to engage you. How much or which note? How much is the purchase consideration or which note? How much or which note? Note one. Of S Limited and share for a cash consideration of 3550 already in large francs, whatever. So 3550. Just calculate goodwill, then we will translate later. What the fair minority stated at fair value? Yes. Use check number 3. The non-controlling interest in S as at the acquisition date was valued at 1450. So fair value of the noisemakers was 1450. Correct? So this one 000. I hope this is 5,000. If it's not, you let me know. Then you less the net assets. So less net assets. So net assets already, I remember it was 32. So the difference is goodwill. The difference is goodwill. So if my workings are correct, then goodwill is 1800. So translation should start from there. Thank you. So this is the date of, so this 18 we translate in Kenya shillings. Using which rate? Tell me 4, 5, 6. Just tell me. Using which rates? Karen, 5. Yes, 5 on the date of acquisition. So translate this at 5. Na leo mko standby kila mtu. Asubuhi sometimes I think usingizi pia nasumbua. So 18 divided by 5, what do you get? 18 divided by 5. 360. So this is 360. Then they said, wow, wenyewe ndio wamesema that goodwill was impaired by 10%. So you less impairment. Impairment 10%. So that is 10% of 1800. That one will be 180. But you see, impairment is an expense and is affecting the whole year. So that one you translate at average. Impairment is an expense, so you take it at average. So what is 180 divided by 6? 180 divided by 6. $30. So wait, don't do that. So I want the closing goodwill. Closing goodwill will be this minus this. And if I translate the closing, I should get this minus this. If it doesn't, then there is exchange difference. So right here, exchange. For now, we don't know. Of course, it will come this side. So closing goodwill, what is in 1720? 1720 should be 16. I hope so. 1620 makes sense. If yes, take it at the closing rate, which is 4. So take 1620 divided by 4. Good. So that is 405. But now, hata before nifanye, 360 minus 30 is 330. Imeenda mpaka 405. It has gone to 405. So definitely that is an exchange gain. Exchange gain of how much? 75. So exchange gain 75. There's something, though not a must, but I would really want you to do. It's not a must, lakini itatusaidia kuweka kazi hivi. The report Roman 1 which we did, hapo chini, let's do this then tutalifanyia hapo juu. So this gain is always shared between parent and minority. So holding company will take, minority will take, parent is controlling 80% in this company. So we'll take 80% of 75, 20% of 75. Give me the two answers. So we will go back, you will share for me the gain which we got in the Roman, the A, which what we did, that foreign exchange gain we got, you will share it between the two. But let's share this one first. How will they share that figure? So this one is 60, 15. I want also the figures for the first one. I had failed to share. The first one I'm told to 20. So to 20 and 55. Thank you. To 20 and 55. Thank you. Thank you. So for now, we can just go direct to presentation of consolidated profit or loss. So in the P&L, somebody to tell me which rate are we going to use to translate those income and expenses of S. Are we going to use 5, 4, or 6? Ukishajua hiyo sasa ni haraka sana. Abdallah 6, Akasi 6. Yeah, that is true. We are going to use the average. So we just divide by 6 by 6 by 6. So write for me there. P group consolidated statement of profit and loss and other comprehensive income. For the year ended 31st December. Shillings are in millions. So you are reporting in Kenya shillings. Like that. We kick off. So we just kick off from how they have arranged theirs. Bila pressure. Revenue. So revenue 2145 plus 10,500 divided by 6 minus intergroup sales. Hakuna, mimi nimeangalia nisijaona. There was no goods which were sold among themselves. Just imagine. Equal to how much? We are only doing this question, so we're running kupaka na balance sheet. So try to give me the answers as they come. Malizane na wao. Tuende balance sheet. The next weekend, so next weekend television. No, next weekend is the one for holiday. Holiday. Hiyo day inafunza hata mara mbili. Hiyo Saturday. Saturday inaweza kufunza mara mbili, Sunday mara mbili, na Monday pia mara mbili. I'm waiting for the answer. Kama niko peke yangu. Correct. 38.95. Ndio usonge haraka, tuanzaka na hii division then you add this one, otherwise itatuwestia tu time. Let's go to cost of sales. Cost of sales 915 plus 63 divided by 6. Then depreciation. Depreciation was absent. UPI absent. So hapa inakuwa tu UPI and depreciation. Kuna. So how much? $19.65. So how much is the gross profit? How much is the gross profit? Gross profit. Gross profit 1930. We proceed. Distribution, ainanga story. So distribution will be 150 plus 750 over 6. ngapi? Two 75. Remember to subtract. Admin will be 345 plus 1350 over 6 plus impairment. Impairment mulipata 30, I remember, but ngoja kidogo. There was amortization. Amortization, I remember you got 120, but 120 was in foreign. The 600 divided by 5. So again, I divide by 6 because it is an expense. Remember the amortization, it was 3200 minus 26, which gave us 600, divided by 5 for 5 years. We got 120. So here I divide by 6 to bring it to Kenya shillings, plus impairment. Impairment was 30 in Kenya shillings. So if you're okay with the figures, add for me. Add. Thank you. 620. Then hizo vitu tunaweza try hizo kuandika operating, andika tu operating profit. So this is minus operating profit will be how much from 1930? $10.35. We have investment income, 15. We have finance cost, 30 plus 150 over 6. Ngapi? Finance cost will be? Mnaonaje? Wakirudia foreign, are you good to go? Dala walete wakitaka. Sawa. Wapate umejipanga. Naona Aisha hapa amenipea 55. Therefore, profit before tax, PBT, will be how much? Good. 995. Income tax. You add 165 plus 450 divided by 6. What do you get? Something I said yesterday, which I have to adhere to. I normally give students the theories, but because the theory ni mingi, I've not even kusoma hizo vitu zote. What I've done, hizo vitu zilianza siku gani? Which year? I normally give you all the theory solutions in this past paper. So I was just yesterday, up to today, I was working on the theory solutions for last semester, December 2023. So I make sure that I give those theory answers. You will find that any theory they will ask, 90% will be theory which they have asked before. So ukisoma your handout, where else usijisumbue na hizo mingi. You just concentrate there. So likely nikimaliza class I will share. Make sure umesoma your theory like 100 times. Itakuokoa kwa mtihani. I'm done. I'm just going to format it times in New Roman 12 1.5 space, then there is nothing much. So that one comes to how much? Tax. Tax comes to how much? Tax comes to 240. Therefore, profit after tax, PAT, will be how much? PAT? $755. $755. Haya, tuende kwa other comprehensive. Wao hata wana other comprehensive na walikuwa natuambia other comprehensive. So, what we'll have to do, we just have to be smart. Andika hapo, other comprehensive income. Other comprehensive income, right in full. Other comprehensive income. Other comprehensive income. So here we have foreign exchange. Foreign exchange gain, all of them were gains. So gain on net assets, then also gain on goodwill. So we had those two of them. Net assets mliniambia total ilikuwa ngapi? What was our foreign exchange gain on the net assets? Give me respectively net assets and goodwill. Goodwill I remember was 75. So just give me this one. This one I remember was 75. How about net assets? 275. Thank you. 275. So total comprehensive income, right in full, my space. Total comprehensive income, you add all the way from PAT and tell me what you will get. Copy? Who has a figure? $11.05. $11.05. Have a small working outside, not hapa chini. Here, I want to continue with other things. So somewhere, lakini hata hizo kuzi tunapatanga hapa sijui what to share, what to where. A lot of nonsense inasumbua tu bure. Hebu tuangalie profit share to the minority. The profit of the minority. Lakini hizi kusana leta hapa ni kuwasumbua tu bure. Hiyo swali ulipita kitambo. You had passed that question long time ago. But let's just see. So how about small working outside? You say PAT of S limited. Profit after tax of S, because I'm going to share to the minority. So reported, how much is the reported PAT of S? Check. Reported PAT of S is 1,500. So it is 1,500 divided by 6. Gapi? What is 1,500 divided by 6? 1,500 divided by 6? 250. So this is 250. Then you less amortization. Amortization was 120 divided by 6. This one is 20. Less impairment. Impairment was 30. No, you require 30 direct. 30 was in Kenya shillings. So 50, 200. So of that profit, NCI will take 200 times 20%, which is 40. That's what they will take. So I'm going to wrap there. So make sure you're done. Thank you. So I'm deleting this one. So you come here and say PAT, PAT to NCI 40. Holding company takes the total iko hapa 755. So 755 minus 40. That is 715. Have that. Haya. Total comprehensive to minority. How did you get the total comprehensive? You took PAT plus foreign exchange gains on net assets and goodwill. So on profit alone, minority have gotten 40. On the profit here of the 755, they have gotten 40. Then on net assets, I think I'm right. Walipata 60. What did they get in the net assets? The share. Minority walipata ngapi? For you 275. What was their share? 55. They had gotten 55. Then on goodwill, of the 75, they got 15. They got 15. So in total, this is 70, 110. They have gotten 110. So my holding company, I don't see why you should go the long process. Long process is you taking is you taking 715 plus 220 plus 60. Or you take the total 775, 1105 minus 110. It will give the same answer. You can take this, you can take 715 plus 60 plus 220. I remember here they go 220. 220 plus 60 plus 715. You should get the same if you take the total minus what has gone to the minority. So how much? 1105 minus 110. We are done. Tell me what you are getting. Nine, 5. Thank you. So 995, taking us back to 1105. You are done. How many marks? Marks. 6 marks. That's 6. Na mtu alikuwa pate hii. Students were getting 1, 2, 3. Tuseme hiyo tuwatana nayo. So 1, 2, 3, 4, 5, 6. Hizo zingine wachana nazo. So inaweza kuwa 3 times 2 kweli. Maybe it was 6 at 1 because this one was easy. Hizo nimemark ndio mtu anapata. Hiyo story mingi ni kusumbua tu bure. So those 6 ticks were easy to calculate. So now we are going to the balance sheet. Balance sheet, remember 3 critical workings. 1, goodwill. God is good, goodwill tushafanya in working 1. 2, NCI, retained earnings. So we need those 2 workings. So let's do those 2 workings, retained earnings, NCI. I give you 3 minutes or 4 minutes break. Then we go and present, we come back and present balance sheets. So right there, group retained earnings. group retained earnings. Good, we start. So Kenya shillings, of course. For P, go to the balance sheet. Now we're in the balance sheet. 2560. But for the subsidiary, you take post. So you add post acquisition profits, S. So for S, you check post acquisition profits. You check post acquisition profits. So post acquisition is the profit which came after. They were acquired here. So post is what they made from here to here, which is simply the profit for the year. So profit for the year, profit for the year was 1,500. I remember that. Divided by 6. 1,500 divided by 6. Then the parent will take 80% of that profit. Nipati answer. Parent will take 80% of that profit. So I'm given 200. Thank you. You can bring it here. 200 less amortization. Amortization, if you can remember, it was 32 minus the 26, which came to 600. 600 we divided by useful life, which was 5. We got 120. So it is 120 divided by 6, 80%. Parent will be liable for 80%. So what is one by one? Impairment, then we are done. So what is 120 over 6 is 20. 80% of 2016. Then less impairment. Impairment loss was 30. So 30, 80%. Remember 30 was already in Kenya shillings. 30 was already in Kenya shillings. So that will be 24. So 24 plus 16 is 40. 40 from here is 160. We add, sorry. Therefore, consolidated retained earnings will be the total. Give me the total. $27.20. So that is the profit of the parent. Let's check minority. Minority is only what is important. So NCI's equity. Equity of the minority. So remember, this is working 2. Working 1 was goodwill. This is working 3. So minority, watu wanaogopanga minority. Kwa nini watu wanaogopa minority na minority ni minority tu? So you start with their fair value on acquisition. So fair value on acquisition. Check note 3. Kama niliona wapi? Note 3, where are you? There. 1450. So 1450, remember that was on the date of acquisition. So to translate, you divide by 5. It was on the date of acquisition. So the exchange rate on that date was 5. So what is 1450 divided by 5? Somebody? To 90. Thank you. To 90. You add post acquisition profit share. So post acquisition tukireconcile vizuri ni 200 minus this imepata 160. So minority will take 160 times 20%. Hiyo itakuwa ngapi? 160 times 20. Na kwani sioni kama hiyo iko sawa because hebu hata nione tu figure hii. What do you get? Because uko kwa P&L niliona tuliwapea 40. So the answer should be 40. Niliona PAT share pale kwa P&L niliona tukichukua 40. We got 40. So this 32 must be having an issue. What could I be missing? Because I remember we got 40. Check P&L pale chini. PAT, where we say PAT attributable to. Just check. Because I don't know why it should bring an issue. Because it is this one here. 1500. Kama tumekosea hapa. 1500. It should be this way. Let me say. It should be 20% into bracket. 1500 divided by 6 minus amortization. Amortization is 120 over 6. Yes. Minus impairment. Impairment was just 30. Why are we getting different answers? Well, someone gave me a figure which was not right. We'll confirm this one because otherwise it can bring lots of problems. But why it is giving us a different answer here? This one was wrong because it is the same thing. Because this one took 8. Somebody to tell me why there is a variation. Why is that 32 and this one? Because it's the same. 200 minus this, 160, 20 should give us. Why are we having that variation? Because it is 1500 divided by 6, 20. This one also 20. This one also 20. Why should we have a different answer anyway? Someone to tell me why? As I respond to this call. Oh. Okay. All right, I think I lost you on the network, but you are back. Why are we having that difference? Because it should give us the same thing. Why are we having the variation then? It should be 200, not 160. Lakini. Oh, I know where the problem is. Problem is me, not you people. When you mko sawa. Problem is, you see this 160, it is based on 80. So mimi nachukua ya parent ndio na multiply na 20. If I want to multiply by 20, then I should take 160 divided by 80. I gross it up. So that was my mistake there. Nimeona? So, in fact, let me naacha hivi. This one explains it all. So this is 40. Have that one there as 40. Have that one there as 40. Then you just add the exchange, the foreign exchange gains. Foreign exchange gain. I remember kuna mali walipata 55 and somewhere they got 15, which was 70. So in total, minority should claim that one there. How much is the total for MCI? Thank you. Thank you. What is the answer? Somebody? Total for MCI 290 plus 110? 400. Yeah, 400. Full stop. Do we take a small break or we just do balance sheets to Malise? Tell me as I run. Do you need the break? Do we finish or you need a small break? So because nobody has talked except Makas, who has said let's proceed. So let's just proceed and finish. Then I leave you to do your own stuff. So P group. Consolidated statement of financial position as at 31st December 2021. Be there. Assets we are dividing with which rate, students? Which rates are we using for the assets here? 5, 4, 6. Four is correct. Good. All right, there we go. So non-current assets, PP. So PP is 4850 plus 7,000 divided by 4. There was no depreciation. So the way you are giving me the answers for P and L, furnish me with those answers. 6,600. Good. Next, investment in S replaced with goodwill. Goodwill was our king one. What was the value of goodwill? Of course, translated into Kenya shillings. It was how much after translation? Thank you. For 5, there was a brand. Brand. Hata hiyo brand lazima tukue keen. Tulipokuwa keen itatuletea shida. Brand, they said, was the difference, which was 32 minus it was 32. That it was 32 minus what? Minus 26, which gave us 600. So I will start from 600 minus amortization. Amortization was 120, but now because this is balance sheets, you divide all of them by 4. Yes, that's how it should be. Hebu jaribu hiyo nione what it will bring. So I'm being told that is 120. Kuna kitu kingine. Can you add for me non-current? Tunasonga. So 71.25. Current assets. Inventory. 1030 plus 24 divided by 4. No UPI. How much? Kama niwaweke na zote, then you just give me the 3 figures. Receivables 970 plus 1960. There was no intergroup debts. Cash 410, 540, 4. So I want what I want the total assets. So it means you get this, add the 4, then give me this answer. So give me total assets. That is the answer I want. Total assets, 2 people are getting 10, 760. Anybody with a contrary answer, please you say, so that I can write them. If no, I will adopt their answers. We just adopt those answers. If you have different, you let us know. Ndio tusifike huko mbele. If there is nothing, let's go to equity and liabilities. Equity and liabilities. Ordinary share capital, parent only, 1,500. Share premium, parent only, 500. Retained earnings, working 2. Tumepata ngapi? What did we get? Retained earnings working 2 tulipata ngapi? That working? 2720. Exchange reserve. So exchange reserve, here you only bring for parents. I remember parents somewhere getting to 20 and somewhere parent getting 60, if I'm not wrong, being to 80. Please just confirm. But I remember those two figures from the exchange reserve when we were sharing. Then noisemakers, NCI check working 3, yote tumefanya sahi nakumbuka 400. Give me that total. $5,000 flat, okay. Non-current liabilities. $54,500, which is which? Abdallah is saying 54. 54. So current just check. Maybe you are leaving out this 400. 54. Non-current, 10% bond. Bond, 820, 2640, 4. Hiyo kitu hata hakuna kitu kingine iko na workings. Kila kitu ni kudivide na 444. So I want you to tell me whether it is balancing huku chini. So bring the 10%, then deferred tax. Deferred tax 740 plus 2164. Current liabilities, payables 1330 plus 2240. Tax, current tax 520, 760, 4. Can you add all of them? Tell me that you will get what I was given here at 10,760. If you get that, I will be very much happy. And if it's balancing, you let me know. Yvonne, balancing 10, yes, fine. Manage the balance so that we come to, we check for the person who is not balancing. Well, walishaleta hiyo nini? Walileta foreign laxating, so I don't know. Well, hapo nimekutu. So, wacha mambo ya foreign nipumzikia hapo. You just use those two illustrations, they are enough. Just do ilikuwa marks ngapi? So when we meet in our next class, we are checking the last item in group called consolidated statement of cash flow, IAS number 7. Consolidated statement of cash flow. Consolidated statement of cash flow. So I've already shared the notes, the handout, plus the format. So I want you to write, to summarize. I don't want you to summarize, you just write all of them if you wish to, because I've already summarized. Mpaka your format before the next class. In fact, you should write it. I will not even discuss anything there. I will come straight to the questions. So I've given you the notes on the cash flow plus the two formats, the indirect and the direct format. So give me time. I see how to share with you the theory. Those theories, once I share, make sure you download, you print, be reading it every day, be reading it every other day. Then it will be very good with you. So have a nice evening. We shall meet in our next class. So let's end at that stage. So this will be the end of the group. So thank you.